corporate insiders and CEOs have sold a record 69 billion in stocks in 2021. And this ranges from all the large companies we hear about. So you talk about Elon Musk with Tesla, Mark Zuckerberg with Meta, Jeff Bezos with Amazon, Nadella with Microsoft, the Waltons with Walmart, Google executives. It goes on and on and on. And this year in 2021, the sales are up 30% from 2020 and up 79% versus the 10-year average. So selling is the name of the game in 2021 with executives and these corporate insiders. So I want to talk about why are they selling and what should we be doing? Should we be worried? And that's what we're going to cover today. First, I'd like to encourage you to subscribe to my channel. It's something free that you get to do. There's not a lot of free things out there these days. I put a lot of time and effort into these videos, so I appreciate it, and thank you very much. So let's get into this video. So again, the top 48 executives have collected more than 200 million each, at least, from selling their stocks. And this is 4 times the average. And this is going on and probably will go on till the very end of this year. So I am going to go over 3 main reasons why this is happening, and then I'll cover what we should be doing. So let's start with reason number 1. As we all know, the stock market is at all-time highs, and many companies are at the highest valuations they've been at in their history. This year, we've seen so much, rise in stocks, it's ridiculous. And so these CEOs and insiders are looking at this as a time to maybe take some profits, as there might possibly be a dip coming or a slowdown, and it could be a smart thing to do with these individuals that are very wealthy to take some profits. And I think what they're doing is, if you look at the history, let's look at the history of other financial crises. Not to say we're in one now, but before these other crises happened, like with the internet burst and the housing burst in the 2000s and the 90s, you saw these CEOs and executives doing the exact same thing, selling out of their stocks at peaks and then buying in the dips. And so that's not to say this is going to happen, because nobody can time the market, not even Elon Musk, but it's possible that they're preparing themselves and positioning for some buys at some cheaper prices. And that is just simply put, and so that's reason number 1. Reason number 2 is record inflation is occurring. In October, the inflation rate was at 6.2%. That is ridiculously high, and that's at a 30-year high. So these executives and corporate insiders, what they're doing with this high inflation is they're reevaluating their portfolio and most likely selling to rebalance, because the last thing you want to do is have your portfolio not beat inflation. So right now you have to, have your portfolios, gain above a 6.2% in order to be profitable and beat inflation, or else you're losing money. So I think that they are not wanting to lose purchase power, so they're selling now, and they're going to put their money where they think there's going to be good growth. And so we're going to talk about that a little bit, but inflation is another reason why I think these executives are selling. Reason number 3 is a big one. This is probably the number 1 reason why they're selling, and that is due to tax increases. Now, some states have recently increased taxes on capital gains. Now, that's the money that we make from our stocks, whether we sell or get dividends from our stocks. And so this is affecting a few of these CEOs especially hard, because one state that's doing this is Washington State. And as we know, Microsoft is headquartered out of Washington, as well as I'm sure many of the executives that work there live in Washington State as well. So I want to show you this video that we're going to talk about a little bit more after. And so this is talking about the increase in taxes with Washington State.
40% of this year's total. Satya Nadella, the latest to make headlines, he sold half of his Microsoft shares last week for a total of $285 million. In a statement, the company saying the sales were for, quote, personal financial planning and diversification purposes. But another unsaid reason for all of this selling is taxes. Along with the threat of higher federal taxes, Washington state is about to impose a new 7% tax on capital gains. That starts January 1st. Nadella saves $20 million in taxes by selling now. Jeff Bezos saving $700 million. So, Carl, we're going to see whether the Gateses or Bomber, some other people who live in Washington who are wealthy, are going to do a little holiday trimming in December as well.
7% is pretty high. So I looked up this bill, and it is targeting anybody that makes profits above $250,000. So right there, I think that is, going to excuse all of us from this bill, most of us, shall I say, and it's really affecting the wealthy and the wealthiest of the wealthy. And so you and I really don't have to worry about this unless if we're making $250,000 in profit or more in the in 2022 and going forward when this bill becomes law. And so these executives and CEOs are doing is they're selling out now to save big on future taxes. And that makes total sense, right? Maybe a small portion is to pay for current taxes, but the big part of it is to position themselves to save on this new bill that's going into effect. And that's smart. That's just smart, plain and simple. And so again, this is mainly affecting the wealthy and the tax consequences that are in the future for them. So it's these three reasons why these CEOs and executives are selling stocks right now. Uh, you know, of course, the high stock market valuation. Everything's at like record peaks. It feels record inflation is happening, and tax increases. These three reasons are mainly why they're selling. Now, is there some other reasons? Possibly, but that we don't know. This is the main three reasons. I don't think people can ever time the market, so to say there's going to be a dip or a crash, I don't like to play that game basically. But what can we do? Well, let's look at the tax increases. Most of us are not going to fall into that bucket, so I don't think we need to worry about selling stocks for that reason. If you do, then I'd suggest talking to a tax professional and seeing what options you have and if selling your stocks is a smart idea. As far as inflation and the market being at all-time highs, I think we can learn something from these executives and corporate insiders. I think it is smart for us, every one of us, to look at our portfolio and see if any rebalancing needs to happen. Recently, I watched a video of somebody else on YouTube, and they had a really good graph showing throughout history that large cap companies and mid to small cap companies usually rotate over time. So in other words, when the large cap companies have high growth, usually the mid and small caps, have the smaller growth or the decline, and then it switches where the large caps kind of have a slowdown, and then the mid to small caps have their time to shine. So recently, the large cap companies have grown tremendously. So it's kind of expected that in 2022 the tables might flip, and maybe a lot of these executives are putting money from these companies that have run up so much, the large cap companies, and putting their money into mid and small cap companies. I think the same can be done for us, where we can look at our portfolio. Now, I don't suggest selling to rebalance, but maybe your future purchases is where you rebalance. That's what I'm going to do. I think the large cap companies have gone up so much. That's something that can't be repeated year after year. It's just not, something that they can do. And so I think, these 30% gains that have happened in the last couple years, I don't think that's something that could be, kept going for too much longer. And there's going to be a slowdown at some point with these stocks. And I think the mid and small caps that have kind of been left behind because everyone is focused on the large caps might start turning a leaf and growing themselves. So I think there's a few small to mid cap companies in my portfolio that I'm going to be focusing on a lot more in my purchases than the large caps. And so this is something I think we can learn from these executives. And I think it's a smart thing to do. So I don't think there's nothing to worry about. I think if a dip or a crash happens, good, everything's going to be on sale and we just buy more. But don't let that scare you. If it scares you, you're in this for the wrong reasons, okay? The long-term investor wins in the end, and that's how it should be when you invest is long-term quality stocks and don't worry about what the market does, just keep buying. If there's a dip or a crash, then maybe take some extra money to purchase some more shares, but other than that, just let it be. If there's a company that the reason why you bought it, the dynamics why you bought it have changed, then maybe this is a good time to sell, especially if the stock has gone up a lot. But if it hasn't, if that company is still doing the things that you bought it for, then hold on to it, right? So overall, I think what we can do is look at our portfolio and rebalance if needed and just hold our stocks and keep buying. That's what we should be doing. The stock market is nobody can ever predict it. There's been too many that have tried and failed. And so the best thing to do is just buy consistently and regularly. A video I did recently, I'll leave down in the comments, goes over 6 things to pretty much guarantee you growth in your portfolio. I highly recommend this video, and it's really helped me grow my portfolio 20% so far. And I'm going to do an end of the year review and reveal of my portfolio, but 20% I believe was achieved because of these 6 things that I laid out. And so with that said, guys, please subscribe to my channel. I put a lot of work into these videos and do a lot of research. I appreciate your time and your viewership, and I hope you guys have a great day. We'll see you next time on Mark's Finance and Fitness.